What if I told you that there is a chart that has basically nailed markets for over 100 years, and the guy who made this chart was a farmer in the 1800s, and yet it pretty accurately pointed out that you need to sell in 1999, you need to sell in 2007. Now, it hasn't gotten everything 100% right, but it is a very interesting chart, and I do want to discuss that with you and how the next prediction on the chart is actually lining up with what some very big brain people like Ray Dalio are saying about markets right now. Before we get into that, smash that thumbs up button if you do appreciate this kind of content. Obviously, subscribe to the channel if you're not subscribed already so you can get more of this great content in the future. So, this is the Benner cycle chart. This has predicted with scary accuracy a lot of crazy stuff in markets, and here's a few recent ones that we can point out. We can point out 1999. He identified that as a year of good times, high prices, and the time to sell stocks and values of all kinds. He also put that in as a panic year. Now, a panic year can be a positive or a negative panic. People are panicking with greed or panicking with fear. It was a greed year in 1999, obviously very quickly turned into a panic moment in 2000. So 1999 was the year to sell, the year to get out of the market. Now, obviously, he couldn't have predicted the dot-com boom, but he did predict that markets were going to pump in 1999, and he nailed it, which is insane. What about 2007? Look at this. Year of good times, high prices, sell. Well, 2007 was exactly the time to sell. That's when the S&P 500, all major indexes, they topped out in 2007. 2008, of course, the global financial crisis, and everything went to crap, basically, in the markets. Insanity. Now, those are just two examples. And look, not everything's been totally perfect. He's been off by a few years on some stuff, and other things haven't necessarily come to fruition, but there's definitely been enough within this chart that makes you go, whoa, that's crazy. How the heck did this guy do it? Now, again, over 100 years old. Now, at the bottom of his card, that little card we just looked at, he wrote sure thing. And for 100 years, he's been pretty damn close to perfect on a lot of this stuff. He was an Ohio farmer, and the 1873 market panic was a big blow for him. It wiped him out. So in trying to understand why this happened, he discovered the notion of market cycles, as we've discussed at great length here on the channel, of course. As a farmer, Samuel knew that the seasonal cycles affected crops, which then affect supply and demand, which affects the price. Now, he looked deeper into these cycles and found an 11-year cycle in corn and pig prices with peaks every 5 to 6 years. This matches the 11-year solar cycle. Benner figured that this solar cycle affects crop yield, affecting revenue, affecting supply and demand, affecting price, which affects everything. Crazy, man! Now, what is this telling us about what's going on right now? Here's 2023. 2023 is identified as a year of hard times, low prices, and a good time to buy stocks. Of course, early 2023 was definitely that. And late 2023 could still hold some surprises for us, so don't count your chickens before they hatch, guys. But it's very interesting to see that he marks 2023 as a year to be buying. We, of course, have seen all kinds of fear, the macro situation, financial stuff is looking really bad at the macro level. We have commercial real estate that's problematic. We have consumer credit going crazy, bankruptcies, defaults on loans, all kinds of crazy happening. Interest rates are high, unemployment's going up, inflation's remaining stubborn, et cetera, et cetera, et cetera. All that creates a lot of fear in markets. And even though we have had some incredible rallies this year, again, early 2023, if you'd bought in like January, very much spot on. If you bought like Meta in January, you would have got 100% gains this year, for example. Crazy stuff, right? What's interesting is that he has 2026 as a year of good times, high prices, and a time to sell stocks and value of all kinds, which is very interesting because that correlates very curiously with what a few other people are saying. We're going to get to that momentarily. I just want to do a quick mention before we dive into that information that if you're not subscribed to the Wealth Mastery newsletter yet, you are straight up missing out. If you're investing in the Web3 space, you're investing in cryptocurrencies, you need to get signed up. It's the best damn newsletter in the business. Every single issue, jam-packed, full of alpha for you. My team and I spend about 40 hours a week putting this together. Look, I know how it is. You're busy. You got the wife, you got the kids, all that kind of stuff. Totally understand. You don't have time to be out there seeking every opportunity in the markets. Well, our newsletter distills down the key news, altcoin alpha, the latest, hottest airdrops, and much, much more. All for the great price of free. Yeah, you can join our 75,000 weekly readers and sign up for free using the link down below in the description. So check it out if you want to stay up to date with all of the latest happening in the crypto space. Now, let's see how old man Benner, the farmer dude from the 1800s, how what he has predicted lines up with some of what other people have predicted. So, the Federal Reserve, according to new projections by the Federal Reserve, they don't see a recession until at least 2027. That's interesting. Of course, markets usually start correcting before a recession actually comes in. The Fed's often wrong on things, sometimes dramatically, so maybe a recession comes sooner than 2027. Maybe it comes in 2025. Maybe it comes in 2026. If it comes in 2026, then Benner nailed it again, which would be insanity. If it comes in late 2025, well, he was off by a few months. I mean, give old farmer man from 100 years ago a break, guys. Come on, that would be pretty crazy if so. Obviously, if the recession comes in a few months' time, which it could, we are in uncharted territories to an extent with what's happening in the bond markets and all these kind of crazy macro stories we're seeing happen right now. We could see it sooner than later. Not super likely. I'd say it's going to take a little bit of time. If we're going to get a recession, it's probably going to come in a little bit later, not so much sooner. But I am always ready to be corrected and humbled by markets, so take that with a grain of salt. Still, though, if this projection does hold, it's pretty damn close to what Benner is saying, which is very interesting. Now, here's this information. This is called the lag effect. So we've discussed this recently, but let's use it here as another great example about why 2026 could be a year to watch out for. So when interest rates peak, recessions tend to lag anywhere from 6 to 17 months behind. Rate cuts usually come just a few months before the recession starts, assuming we get one more hike in 2023, then set a clock for about a year for a final market top before the crap hits the fan. Now, how long it's going to take from the final Fed rate cut, and of course, how high could interest rates go before the Fed starts cutting rates? It's unknown at this point. Jamie Dimon, the CEO of JP Morgan, came out the other day and said that rates could actually go as high as 7%. And even though the Fed's not projecting that right now, if inflation starts going up, employment remains sticky, then they may go further than people expect. Now, what's crazy is you can have a high interest rate environment and still have stock markets go crazy, crypto markets go crazy. That's all possible. So it's very interesting to keep that in mind when we're talking about this. But let's say that we get the final interest rate hike in December, for example. Well, then we have probably until the end of 2024, maybe sometime mid-2025 before the recession actually kicks in, according to the lag effect and what has traditionally happened in markets in history. But if we have rates going really higher for longer, and the Fed surprises everybody and goes up to like 6%, 6.5%, maybe we don't even get up to Jamie Dimon's 7% prediction, then that means we might be getting interest rate hikes until mid-next year, which really then lines up with a 2026 potential target. Arthur Hayes, the CEO of BitMEX and commentator on all things Kraken in the markets, saying that he expects a melt-up between now and 2026, followed by an economic collapse. Interesting. There's that 2026 number again. Now, we're not going to cover all the things Arthur said here. Arthur is a very good writer, and if you want to go and read some of his stuff, I would highly recommend that you do that. But if we have that melt up, in spite of the high interest rates and all that stuff, market's going to pump, market's going to go crazy. It'll be nuts. We'll have a good year or two before the big one. And that, of course, would fit in with even broader cycles because Ray Dalio, the Gigabrain, let me read this for you, and then we're going to show you the chart. Since 1945, there have been 12 and a half credit, debt, market, economic cycles and associated political cyclical swings. We are now about halfway through the 13th short-term debt cycle. This is when the tightening to fight inflation is causing a cracking in the financial markets and just before there is an economic contraction part of the cycle. Looking at the long-term debt cycle, debt asset and debt liability levels have become unsustainably high via unsound finances, and debts are projected to increase so much that they will have to be bought by central banks, who themselves are close to having negative net worth because of the big losses they have on the debts that they've already bought. Given these conditions, it appears that interest rates that are high enough and money and credit that is tight enough to fight inflation and provide lender credits with adequate real returns will be unbearably high for borrowers and debtors. This means the system is close to the point where big restructuring will be needed. Big restructuring is not something you want to see in economies. That means something's about to break in a serious way. This chart right here, very interesting. This is where we are in the long-term cycle. So we are right here, right here. That means, according to Ray Dalio, we have one last little hurrah before we're done. We're done, son. If you don't take profits next cycle, you're going to be living in a world of pain, according to this chart, of course. But it's very interesting because that probably lines up. Ray Dalio doesn't give a date here, of course, but that likely lines up with the next few years, potentially a 2026 target on this as well, which is super fascinating. So we see a lot of things potentially lining up for very, very bad market conditions in a few years' time, and perhaps one final hurrah for markets before things really go to crap. Now, is that all going to come true? I don't know. This is just, of course, a chart that was written by a farmer 100 years plus years ago. And Ray Dalio's cyclical theory is very valid, without a doubt. How does that play out? We shall see. Will Ray Dalio have nailed this one as well? Remember, he's a very smart dude, and he's been able to accurately navigate markets for decades with incredible accuracy. He hasn't always got it right either. I'd like to point that out. In fact, he's got it spectacularly wrong sometimes, and he'll be the first one to tell you that. The Fed are liars. JP Morgan's a liar. Jamie Dimon, right? Those guys, you can't really trust what they say, the prognoses that they make. But it is interesting. It is interesting when you start looking at the data, when you start looking at the charts, you start looking at what people are saying. Well, you have to ask yourself the question, are all those charts going to line up and be correct? Are all those thoughts going to be correct? Or is this time different? You let me know down below in the comment section. I'll see you next time.